Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Monday, so we have Macro Monday at Container Exchange, where we typically look at sort of the key events and drivers of the week to come, which macroeconomic indicators are due to be released, and what will be the likely impact on shipping and, of course, container trading. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. There we go. So this week, actually relatively quiet. We start off with a little bit of flurry of various information from across the globe, but specifically tomorrow, Tuesday, US retail sales figures are going to be released for the month of September. There's a 0.3% growth month on month expected, versus a 0.6% month-on-month growth in August. So a slight sort of come down here, but that might also be just seasonally, so nothing significant to worry about. But then on Wednesday, massive focus on China with a number of indicators due to be released in China. These are all year-on-year figures. GDP growth, actually very, very big headline figure, expected to sort of dampen slightly to 4.4% versus 6.3% reading last quarter. So this is again sort of quarter three versus quarter three last year. So it's definitely a downturn of momentum there. And then sort of two more specific indicators: industrial projection weaker at 4.3% versus 4.5% last month, and retail sales stronger at 4.9 versus 4.6. So both indicators going sort of in opposite directions. And then I thought it was going to be very interesting to actually look at industrial production in China over the past 20 or so years, or 25 years, which I've put up here in the bottom right-hand corner. And you see this was always very, very, very strong up until sort of the 2010, the turn of the what's it called, into the 2010s, where we had regularly growth of 10, 15, up to 20% year on year. And then a significant sort of slowdown or calmness here up until 2020, until COVID hit, and then we had these spikes both through the bottom as well as to the top, with here sort of almost a 35% growth year on year at the COVID recovery point, and now we're coming down into sort of that longer term historical trend that started around about 2013, 2014, sort of decreasing year on year, really settling down as China becomes bigger. Of course, year on year growth rates become smaller. So that's where we are right now. No significant uptick expected anymore here. The question, of course, will be how much of that growth then translates into container shipping demand, specifically Trans-Pacific, intra-Asia with the China +1 policy, and then into Europe. So definitely good news that there is some growth, and we're sort of fighting our way out of this negative territory. But that China will remain the growth horse of the global economy is at least sort of not questionable, but not so likely anymore. No, that's it from me. From us for today. Not a lot of indicators that as I outlined at the beginning. Have a fantastic week ahead. Thoughts and prayers to our colleagues and friends in Israel, and hope that, of course, the violence there will come to an end very, very soon. Now, have a good start into the week. Take care and see you on Wednesday. Bye-bye.